JPMorgan warns of U.S. recession in 2025 amid Trump tariffs. Details here. Michael Farrelly, chief U.S. economist at JPMorgan, downgrades the firm's GDP forecast in a note to clients, now expecting the U.S. economy to shrink by 0.34% in 2025, a sharp reversal from the earlier growth estimate of 1.3%. JPMorgan Chase Co. has warned that the U.S. economy is likely heading into a recession by the end of this year amid newly announced aggressive tariffs by President Donald Trump. The cautionary outlook follows a massive $5.4 trillion market value wipeout across global equity markets in just 2 trading sessions, sparking fears of a worldwide economic recession. Michael Farrelly, chief U.S. economist at JPMorgan, downgraded the firm's GDP forecast in a note to clients, now expecting the U.S. economy to shrink by 0.34% in 2025, a sharp reversal from the earlier growth estimate of 1.3%. He also projected unemployment to rise to 5.3% due to the economic drag caused by the tariffs. Also read: what should Indian investors do amid U.S. recession fears? Experts share tips as tariff war escalates. President Trump's surprise move to impose a blanket 10% tariff on all imports beginning April 5 and even steeper levies on countries with large trade surpluses, including India, has triggered widespread concern over a looming global trade war. The S&P 500 plunged to its lowest in nearly a year, while the Nasdaq officially entered bear market territory after tumbling over 20 from its December highs. Major financial institutions, including Barclays, Citi, and UBS, have joined JPMorgan in slashing their U.S. growth forecasts, with some now seeing near-zero expansion for 2025. UBS economist Jonathan Pingle in a note said U.S. imports could decline by over 20%, taking the import-to-GDP ratio back to levels last seen before 1986, a signal of a broad-based contraction. Speaking at a business journalism conference, Federal Reserve Chair Jerome Powell warned the tariffs could inflict much greater and unexpected damage, complicating the central bank's fight to control inflation. Despite inflation projected to climb to 4.4% by the end of 2025, JPMorgan now expects the Fed to pivot toward rate cuts starting in June. The benchmark interest rate, currently in the 4.25–4.5 range, is forecast to drop to 2.753 by January 2026. With volatility surging to a 5-year high and consumer sentiment eroding, economists are calling for swift fiscal and diplomatic responses to prevent a deeper global downturn. Nan